Hey, Han, good afternoon, folks. Welcome to Twitter Spaces with me. My name is Kalu Aja. Thank you for joining me today. Today, we're going to talk pensions, right? As you guys all know, the National Pension Commission of Nigeria, PENCOM, just recently released the guidelines, right, on how we can assess retirement savings account, what we call the RSAs, to be used, we say, towards a down payment for a home, right? It just came out, I'll say, about last month, and we just decided to bring in the experts today into the studios, right? So we can talk to them, find out all about it. What does it mean? How can we assess those funds? If we're a developer, how does it favor us? If we're a contributor, how can we get access to it? Like I always say, Nigerian pension scheme has one of the great successes of Nigeria since you say the return to democracy since '99, from a deficit of about 2.5 trillion, I believe. Way back in 2002, it was about 25% of Nigeria's GDP, to now we're give or take about 14 trillion positive, created accounts that are secured by biometrics, that are individualized. It's in your personal name. You contribute whilst you're working, and when you retire, you go to a private sector company, and that company pays you. That's really Nigeria's number one source of long-term financing or funding in Nigeria, the Nigerian pension industry. So it's been a great success, and this is just this new policy allowing RSAs to go towards housing is just another success story of Pencom. So I'm very very pleased to have with me today to talk about this in person representatives from the Nigerian Pension Association of Nigeria, with the CEO, Mr. Oguchi Aguda, and also I've got Akimbola Akintola. Once he joins, he will. Okay, I have him here. Just going to add him. He will, of course, introduce himself. So, Mr. Oguchi, good morning or good afternoon to you. If you can unmute, give us a brief introduction. Tell us about PenUp. Tell us about then we can and start our session. Thank you.
Thanks, Kalu. Nice to be engaging you again. I know we had done this a couple of months back, and recall that during that time we actually spoke that something was cooking and something was coming. And yeah, the soup is done.
Amen.
So I sit at the helm of PENUP, which is the Pension Fund Operators Association of Nigeria. So it's the association of all the pension fund operators in Nigeria. So they came together to form this association so that they are able to resolve issues, they are able to manage issues via a single platform. Instead of each PFA going to engage the regulator or engage other people, they just do it via this platform. So we represent the pension fund operators, and one of the things we do is just to help in projecting their image, the media, and talking about policies, which is one of the things we are doing today. A policy that we're excited about. It's been long coming, but we believe it has positives for both the RSA holders, the economy in general, and just Nigerians. So we're happy about this.
Love it, love it. I think I have Akintola in here. Does he want to maybe introduce himself?
Yes. Hello, Kalu. I'm Akimbola Akintola. So I lead the research and investment team here at PENUP. So my work, our reports, we have reports coming in the pipeline, just investment direction for the industry, So that's I try and steer those issues.
Great, excellent, good to have you here. So just Oguchi, could you just give us, we say, a summation? Why this policy? Why now? What does this actually do? What's the overreaching, incentive to have RSAs, that are pensions long term? This is what we call our bottom box, right? When you work, you retire, you get this pension payment. Why is Nigeria linking this to mortgages? What's the overall objective of this, should we say?
Okay, yeah. So pensions are long-term savings, as we know, which are savings that will help you in retirement. And typically, if you start working at 25, you can begin to access your pensions about 60. That's about 35 years of savings. However, world over, right? People have said, how can we begin to access those pensions whilst we are working? Number one. And number two is, will it make sense for me to work for a long time, retire, and not even have a house? So this system is to enable people to own their homes, typically first-time buyers, to own their homes whilst they are working based on the contributions they've contributed. So you've contributed over a while, a period, you can use a portion of that to own your homes. So this is not entirely new. It's been in the law since 2014, but the process of actualizing it has been a bit of back and forth. And so it's just coming out now because we wanted to make sure that when the policy does come out, it's implementable, right? There are many people in the ecosystem, but this will enable people who've been contributing towards their pensions to be able to access a portion in order to get their own home. And with that home, the value of the home increases. When they retire, they don't need to get lump sums to buy houses. So there's just something about being at peace when you're in your own home.
And yeah, that's true. That's true. So just walk us through. So let's take myself. Let's say 45-year-old guy. How am I? Who is eligible for this? I have an RSA. I've been contributing. How does this work? Let's start from who's eligible.
Okay, so you're eligible if you've been contributing consistently for 60 months.
That's five.
5 years.
Yeah.
So if you've been contributing consistently, you are eligible. That's one. Two is if you're also a micro pension contributor and also been contributing for 5 years. I think the minimum is 5 years, is 60 months. Even though micro pension has just started, it's 3 years. So there probably won't be anybody on micro pensions who is eligible now, but in the next 2 years there will be.
Gotcha.
So those are that are eligible. You can also do a joint contribution with your spouse, and both of you are eligible, you can do a joint application. So yes, if you're 45 years old, as long as you've been contributing for a combined period of 5 years, you are eligible.
Do you know if I'm qualified for 6 years, my wife has 4 years, does that count, or but do both of us have to come for 5 years?
Yeah, so I think over the next 1 year, you just have to pay for your wife for 12 months so that she can be eligible.
Yeah, it's okay, good. That makes sense. So I if I've contributed for 5 years, does it matter where I've invested? I mean, I could ask Akintola. I mean, because we have over 4 funds, right? Does it matter, right, Akimbola, what funds I'm contributing to, or it's just going to be the balance in my retirement savings accounts, Akimbola?
Yes, so it's the balance in your retirement savings account. It does not matter whether you're in Fund 1 to Fund 6. You can access it as long as it's your retirement savings account. Yes, so that's correct.
Okay, and if I take it out, this is going to be like a withdrawal. What happens to the other balance? That's just going to continue just less. Is that what happens? The account is not
So,
sure.
yes, exactly. So once you've accessed the 25%, your remaining balance continues as normal. So you pay as you pay in, as your employer pays in on your behalf, or you pay yourself if you're on micro pension plan, or even your voluntary contributions. That goes on and that runs as normal.
Gotcha. So if you choose voluntary contribution, so let's just also paint a scenario, right? I see a home, it's worth 10 million. Let's just aim, it's a house in Lekki, 3 bedroom. Let's say it's worth 10 million. I have 10 million in my RSA. What happens? Do I withdraw 10 million and buy this home? Is it in my name? What's the dots and bolts of this? How does this work?
Okay. So let me let Uguchi.
Okay, thanks. Thanks, Kalu. So what happens is that you see a house, this dream house you've seen of 10 million, and you know that you have 10 million in your RSA. So what you do is you meet the developer of the house and you say, I'd like to buy the house. Two of you engage. He now gives you an offer letter and to say, okay, I've agreed with Kalu to buy this house of 10 million. So Kalu knows that his RSA is 10 million and that he's eligible to collect 2.5 million, 25% of that. That means there's 7.5 million remaining, right? So Kalu now approaches a mortgage lender to say, I've seen a house, I've got money for a down payment, I want to finance the balance. So what happens is that he will now go to his PFA with the offer letter, and also with the mortgage bank. The mortgage bank will do their checks and all of that, and then he will now request for his 25%. That 25% will now go to the mortgage lender, and the PFN lender will discuss, will ensure that it's okay. They'll get the titles and all the checks. So the mortgage bank will do all the checks they need to do to ensure that they can give him that 7.5 million. Then the 2.5 million will go from his PFA to the mortgage bank, or mortgage bank will now pay 10 million to the developer, and he gets his house.
Okay, so it's 25% of my RSA that goes directly to the mortgage bank. They don't write me a check, they write it to the bank.
No, they don't write you a check. The money doesn't come to you. The money goes to the mortgage bank. And all the mortgage banks that are part of this process must be licensed. They must have, central bank will vet them, and they must also be paying their pension. So they must have their compliance certificates.
Gotcha. What about the developer? So if I meet the developer, can I write a check directly to the developer, or it just for now has to go through the bank, the mortgage bank?
Yeah, so there are some instances, perhaps if you got a house of 20 million, for instance, and your RSA was 10 million and your down payment was 2.5, and the mortgage bank is telling you need to do a bit more, maybe 5 million, and you can get 2.5 million from elsewhere, right? So what we'll advise is not to write a check to the developer first, is to be able to get the full amount of money. So that is between you and the developer. But I guess just general business advice is, don't write a check to the developer unless you've tied everything together.
So what I'm trying to figure out is that the 25%, does it only go to the bank? So if a developer comes and says, you can write me that 25% check because you have an RSA, can I do that? Or it has to go only via the banks then to the developer? How does that work? Can I write a direct check from my...
No. Well, it will only go to the developer. So people have asked that, okay, I have a mortgage currently, can I refinance the mortgage?
Correct.
And this is a sort of variant of refinancing because you've already paid and you're trying to get the money out.
Yeah.
So it doesn't work in that instance because the money will only go to the mortgage bank. For this version, it will only go to the mortgage bank. So I guess one thing I would like to say is that I guess this is version 1. I doubt if anybody here has an iPhone 1, right? There's always a version 3. So this is the basic. It's come out.
Yeah.
So we're listening, trying to gauge the practicality of some of the things and get feedback. But in the current state, it will only go to the mortgage bank.
Gotcha. Okay, that makes sense, right? And just a quick question, right? So if I'm contributing for 5 years, I qualify. What if I'm retired and I'm just earning my pension? How does that work?
No, so if you're retired, you are not eligible. Or if you've got less than 3 years, you're not eligible. So if you're going to retire next year, you're not eligible for this. Or if you're going to retire in 2 years' time, you're not eligible. Reason being that, mortgage banks or lenders will want to lend money to people who have active work life so that they can pay back the loan. So when you're retired, it's not likely that you'll be able to put that burden on yourself when you're retired. So this is good for people that are joining the workforce, fresh in the workforce. Better late than never. It would have been good for those who are retired to have had it since. But I guess for the Gen Zs, the millennials, those who are 5, 10 years in work, 15 years in work, this is a great policy. And even for those who just started work, you can begin to save towards your target RSA to say, okay, this is the kind of house I want. In 5 years' time, I want my RSA to become XX amount. So you can begin to even contribute yourself. And, if a particular month you don't see your statements, your employer hasn't put your pension, you are the one that's going to come up and say, guy, I need to get a house. Why haven't you paid pensions?
Yeah, I got you. Yeah, because you can actually do like a present value calculation and say, if I want to buy a house, what 10 million in 5 years? This is my contribution. You can actually work that out. If you talk to an advisor, I can tell you exactly how much. So you're saying just walk to the answer. If I want 10 million in 5 years, I want to save X amount every month or every year to get that 10 million. That's a good financial planning strategy. Let
Very
me
correct.
Kimbola. Kimbola, in terms of this process, does PENUP or PENCOM, or is it the CBN, is there going to be any guidelines as to the interest rate that the bank will charge me to get that? Is there like a separate policy on interest rate that will be charging for this mortgage, or separate tenure? Is this still going to be 5 years loan, or is there going to be, listen, you can give these guys a 10-year or 15-year loan? Is there any discussion in that regard?
Uh, in the way the guidelines are written at the moment, so the rate you pay is strictly at the moment is between you and your mortgage bank.
Mm.
So currently there are no guidelines as to the rate at which you pay. But one thing we do hope is that with the level of demand, or the level this will spur in actually in developing homes, that the overall market drops. So because there's an increased supply, because people see that yes, RSA holders can access their mortgage. So we are hoping that prices drop, and people have a cheaper alternative
Mhm.
of accessing their homes.
Makes sense.
But at the moment, there are no guidelines dictating how much or the interest rates you agree with your mortgage bank.
I agree. I mean, it's going to be like a good, should we say, policy or process to drive. I'm more interested in the tenure. If I have a 25-year loan and I can lock it in because I have an RSA, I think the tenure for me is going to be very, very critical. I mean, this is what PenUp is going to, I'm sure, discuss with the other stakeholders in there. But just a question for you again, I don't know whether I could show or I can tell. What about if I've accessed my 25%? Maybe, the PenCom Act says if I'm not employed, I can get 25%, like in a premature truce deduction from my RSA. If I've taken that 25% before, can I still get under 25% for this process?
Yes, you can. So if you've taken the 25% before, you
Mm,
can get on this process.
mm,
But what happened is that um, whether you've taken 25% or not, if you are accessing this program for the mortgage, you need to sort of sign an undertaking to your PFA saying you agree to this, and sort of an indemnity that it will be used for mortgage, right? The reason is because if you've taken a 25% before, so let's look at your hypothetical RSA, 10 million, 45-year-old guy. In between, you lost your job and you took 25%.
mm,
So your mortgage, your RSA balance is now 7.5. Okay, you're left with 7.5, and later you see a house that you like. 25% of that is 1.88, or let's say 1.9,
mm,
right? So what you are left with 5.6.
mm,
All things being equal, right? Of course, it's going to grow before you retire, but all things being equal, if it is 5.6 hypothetical that is remaining when you retire, you get to 60 and it's 5.6 million remaining,
mm.
you will be paid based on 5.6. It's
Wow.
just for you to realize the decisions you are taking and what it could mean when you retire. So what it means, the way you retire, you have a lower amount. But
Mm,
what this does is that this forces people to now get into financial planning, because you can now say, if I've taken my 25%, for instance, and I have 7.5% in my mouth, in my RSA balance, why should I go for a higher house? Maybe I'll go for a lower house, and so I don't have to take
interesting.
25, 1.8. I can take 20%, 10%, 15%, because I know that when I retire, I need to have X amount of money. So it depends on the individual. If you've lost your job, you can still access this 25% for mortgage, but it will ultimately affect how much you have when you retire. For instance, if you are still young and you've taken 25% when you lost your job, taking 25% when you want to take your mortgage, you can actually tell your PFA, okay, I want to go more aggressive. Take me to fund one, for instance. For one is more aggressive. Let me take more risk because I can get more returns. So one of the things I think this policy will do is to force people to begin to plan better, hire financial advisors, talk to financial advisors, and then look at their statements, query
Mm,
their statements, think through because every decision you take will have a bearing on your total balance when you retire.
Very interesting point, and I just want to reiterate what you're saying, that with this new process now, we've added a new complexity in quotes to your financial plan. You are more or less front loading that consumption of a mortgage. So if you are going to take that money, folks, make sure you speak to an advisor and sort of say, listen, I'm going to retire and I have 10 million. I'm supposed to get, say, maybe X amount when I retire. Now I will no longer get that stream of payments when I retire, but I'll have a house, right? If you have a home when you retire, then of course you're not paying rent. But you've got to make sure you marry that. I lose a pension payment, but I have a home. A home is an asset. It might not give you revenues, but it's an asset. So you want to make sure that you balance that asset versus income, especially when you are 65 or 75. So very, very important point that Oguchi is making. But just on that question, so if I have already if I take this, if this is a loan or this is a grant or this is a direct disbursement, just to be clear, if I take this, am I going to pay any interest at all to anyone? If I take 25% from my RSA, it's a disbursement, not a loan, right?
Yes, it's not a loan. It's for you. It's in your RSA account, and the money goes to the mortgage bank.
Okay.
So you are not paying anything on it. It's your money, but you are eligible, to use it to buy a house, not for anything house to house. Some people have
Right.
come to me, okay, I have a business. I want to take 25%. This is not for a business. This is for the house.
Okay. All right. Good. Yeah, good. Make that point. Okay, guys. So I mean, the floor is open. You can send me DMs or request to speak. If you send me a DM, I can ask real quick and get an answer for you. Just to reset the room, we're speaking to PenUp. We're talking about the Nigerian pension industry, the new mortgage policy guideline, of course, passed by PENCOM, that allows Nigerian contributors, or should we say contributors to the retirement savings account, to access 25% of the balance in that account towards a mortgage. And we've understood that payment goes directly to the mortgage bank, and you can use that as part of your equity to get a home. It's not a loan. It's just going to be a direct deposit towards a down payment for a mortgage. Which can I get you to talk more about, should we say, the gig employees? I know Pencom is pushing this, should we say, self-funded pensions, the informal sector pensions. Lots of Nigerian youths, are doing computers on their own, IT, maybe they live abroad. Talk more about that class of Nigerians that do not work for an employer, they work for themselves, they get paid either as a contract or as a gig worker. How does this help them? Apart from just the 5 years that they have to contribute, how else can they do this? Just to make sure, we've already talked about linking this to their financial plan, but just talk more about that, please.
Yeah, so for those class of workers, we love them. I mean, they do a lot, like the creative industry, the tech industry, and many of them, and decently, some of them earn quite much. And it's time for them to begin to think about what will happen when I grow old, when I'm not able to have the energy to run around and quote unquote hustle, right? So it's good to put it away with the financial institution who understands investment. Even though you don't have a formal offer letter or a formal employment, you get money yourself. You can tell yourself, okay, maybe 10% of the amount I get every month, or 5%, it's left to you. I want to invest it in the pensions, or quarterly, right? But it's good for you to do it often through the micro pension. So micro pension is like a self-sponsored plan. You open it with a PFA, but you don't have to have an employer, so you can make those contributions yourself. But what you now need to think about is it's another way for you to own a home, because you build that savings and the savings culture. And if you're consistent, you can take out of that to own your own home, because you can use that as a down payment for a mortgage. So
Gotcha.
if you're a gig worker, don't have structured employment, pensions are still for you, and you can still benefit from the Pension Reform Act.
Okay. So on that question again, right? I want to just make sure I ask this from Harry on Twitter. He's asking, can you buy a home outside where you live? If I work in Abuja, can I buy a house in Lagos? And let me also stretch that argument. If I want to buy a house in my village in Ohafia, can I do that? If I take my money and I say I want to build a house in my village, can I do that?
Yeah, so it's not building, it's for fully built house. So if you have a land or you have uncompleted, this will not work for it in the current guidelines.
Please say that again. Just
So
that, please.
if you have land, or if you have an uncompleted building and you want money to finish that building, this guideline will not work for it, right? This guideline works for fully built houses, which are purchased through a mortgage lender. So it will not work for you want to complete your house or you've got land. It will not work for it. However, it is silent and it does not discriminate against where. So if you live in Abuja and you want to get your house in Ihiala or Heiafa, as you said, Kalu, I hope I pronounced your village right. Forgive me if I forgot the name. But if you, I mean, you've seen a nice place, you want to retire there, you can, as long as there's a mortgage bank willing to finance the balance.
Interesting. Very interesting. I mean,
And
so
Kalu, perhaps what will happen is that, in Lekki, that your house in Lekki that it says 10 million,
yeah,
in Ihiala is probably going to be 1 million. So what can happen is that your down payment might be more, such that the mortgage amount you are taking will be less. That's something to look out for again.
interesting. So you're giving me a business idea now. I can go to a mortgage bank and say, hey, move to Ohafia, because a lot
Mhm.
of people that work in Abuja that want to have a house in the village, and they could then finance mortgages for folks that want to build homes in the village, because they can take 25%, like you said, to build a home in my village is 1% of the cost in Lekki. So this
Mhm.
is and that's a good idea for anyone listening out there in case you
You
want to.
you know what? I can even spin something a bit more. So, like you said, the guidelines came out last month,
Mm,
but I foresee, a couple of things happening over the next couple of years. This week, I'm having some meetings with some valuers and some real estate professionals. One of the things I'm encouraging them to do is that, why can't you guys build houses in Ogun State or Ibadan, for instance, with the train? We can have estates there in that cluster. People can live in Lagos and people can use it and buy houses there, right?
exactly.
So you begin to see things like this. Somebody else spoke about the red line and the blue line in Lagos.
Mm,
Why have houses in Badagry, for instance? So we need to now begin to build on top of this policy. So this policy is the foundation, I say, but with developers, banks, and business people like you, Kalu, who is already your antenna is already going. We can begin to build on this because we know that there are people who can have the effective demand with their mortgage to buy the houses.
Okay, excellent. Let me ask a quick question before I bring in Ola. Ola wants to speak. Let me ask a quick question. This is going to be to Akimbola. Akimbola, does this have to be? What about how do we link this to a Nigerian housing fund? Can I do a package deal with NHF? How is this linked? Is there any linkages with what I'm contributing already for housing fund and this 25%? Go to NHF, do a combo, and then use that as payment. Will NHF just accept my funds and that goes to them? How does this work with them?
Okay, so the answer to that is yes. So if NHF are willing as a mortgage refinance company to refinance or to finance your house, you can act as the RSA balance the RSA balance, the 25% RSA balance, and go to them. So, for instance, the NMRC, let me just use, or the housing fund, for example, their equity contribution for houses below 20 million is 20%. So this is just using an example. If my RSA balance, so a 2.25% of 20 million is about it's about
That's about 5 million.
yes, about 5 million. So if my balance, if my RSA balance fulfills or meets that requirement, that will go to the housing fund. Now, if my balance does not, if my balance does not catch up, I will have to fund that with my own equity. I'll
Gotcha.
have to fund that too. So yes, as your question, going back to your question, that can work. Yes.
Okay, excellent. That makes sense. Let me get Ola in here. He's been waiting. Ola, go. Hi, how you doing, sir? You want to unmute and just go ahead and ask your question? Thank you so much for waiting.
Yeah, so Yeah, good afternoon, Kalu.
Hi, how you doing? Where are you calling from?
Okay, I'm calling from Lagos.
Yeah, go for it.
So practically, I work with power pensions.
Okay.
And I've had a lot of questions around this from my clients. Presently, I have two clients who are asking very important questions. So, where are the list of the mortgage banks that are going to midwife this process? So, that's a very critical part of it. We need to know because the clients are supposed to go to the mortgage banks at first when they identify any of property. When they get their offer letter, they need to liaise with the mortgage bank before they come to the PFA. So we
Yeah.
need to know, is there where do we have a list of mortgage banks? That's one. Two, so can a client choose to buy a land instead of a built property? So a client has 5 million naira in his PFA account, in his RSA account, and he or she has chosen to buy a land of 2.5 million, which equity contribution could go for as low as 700, 500,000, because we need to consider the low income earners there. So
Mm.
that's my question. So we are not looking at those who have RSA balances of 100 million, 50 million. We are looking at, okay, those who have less than 10 million in their account. So how does this policy cater for them? So I
Ah,
needed to address that. I needed to address the part of land. I needed to address the mortgage bankers. Who are they?
okay. Excellent. So
Okay.
yeah, both of you can go ahead and just take it, sir.
No
So
problem.
I think the first. Sorry. Sorry.
Go ahead. Go ahead.
Okay. So the first question was about the mortgage banks who can do this business.
Mm-hmm.
So I think CBN have a list of licensed mortgage banks and it's on their website. I think there are about 20 of them, licensed mortgage banks. Now, apart from being licensed by CBN, they have to have their PENCOM compliance certificate. I think Oguchi mentioned that earlier. So those are the two conditions. And yes, the third condition is they must be in good financial standing. So those are the three conditions any mortgage bank must meet to be able to finance under this guideline.
Okay. Okay. That takes care of the first question, right? So I think we addressed the second question about land. He's asked about land and uncompleted building. I think Uguchi has addressed that we cannot use this
Yes.
for land completed buildings. Yeah.
We
Okay.
can use it for land, but I think, like I said, this is policy is a month old, and I know that other things will begin to layer upon. So for those low income, you know, there are a couple of estates which are not in the outskirts or not necessarily, because when you come towards the city, houses are more expensive, and Lagos is an anomaly, to be honest. If you go to most cities, in the business district is not, you don't see a lot of houses. People live a bit further down, and because of public transport, able to come to the city to work. So for those in the lower income and RSAs are lower, so a couple of things can happen. Number one is to have a target RSA. You don't have to take it today. So think about Nigerians, because we've been so skeptical. When a policy comes, people say, "Oh, let me take it now so that they can change it." You don't have to take it today. You don't have to take it next year. You can still take it in 3 years' time and plan towards that and say, okay, in 3 years' time, my RSA will be this. Okay, if I'm earning X amount, I want to begin to put voluntary contributions so that the balance will go up and I can get a decent house.
Mhm.
Or my wife or my husband, if you guys are married, we can do a joint, right? So I guess let's not get into the point of, oh, it has happened, I need to take it. The
Mm.
first thing is think through and plan. So this, I believe, helps people to plan more and begin to say, okay, where are the houses? And I can tell you for free that there are developers that are already coming together to say, let's build estates for low incomes because we know that there's a demand. So don't forget that before this, when people build houses, they might not have people to take it up. But because of this policy, right, there's a higher probability that they will take up those houses. So we will begin to see schemes like this coming up, and even PFAs
Mm.
are beginning to work with developers. That's what you will see.
Yeah.
So we encourage.
Yeah. And just a quick question. I have a question on Twitter. He's asking about how much can a pensioner contribute to even qualify. That is from Ojuba here. So just to be clear, sir, he has just clarified that pensioners cannot qualify for this. So just to be clear, are you saying if a pensioner is receiving his contributions, he cannot contribute? What if I pay 25% into my scheme and I'm already a retiree? What if I just do a voluntary contribution? How does that work? Would I still qualify? Does it make any sense? If I'm a pensioner, am I completely out if I'm receiving pension funds already from the, just to be clear, from the RSA?
Yes, so the law, the policy precludes pensioners, right? However, I believe that if you have voluntary contribution, and those voluntary contributions can be, the contingent portion can be used as 25% as a down payment, right? And then if the mortgage bank assesses you and says, we are okay to give this guy a facility based on XXX, a number of things, then it's good to go. I believe it's good to go. So you have to have had contributions, and the mortgage bank must be willing to take that risk on you.
Okay, great. So I have a question for you guys. It's three in one. Three very, very good questions from my friend Etola. She's asking, number one, what is the implication for the pension industry? And she's breaking it down this way. To what extent policy of withdrawals impact the overall value of PFA assets? Of course.
Good morning, guys. More life and more blessings. This is Alexander speaking. Alexander Zeze here. I'm the co-CEO of Zeze.
All right, guys. So sorry about that. Yeah. Let me just take that off. All right. So, guys, so she's asking, how will this withdrawals, impact the overall value of PFA assets? Because of course, we're giving people 25% now. She makes the clarification that the fund's average return today is about 12%. It used to be about 30% a decade ago. So the first question is, how will this withdrawal of funds, going from the RSA to mortgage banks, how will it affect the overall, should we say, strength and capacity of the retirement savings account scheme? That's number one. Number two, talking about this, should we say, JACPA, mass immigration, high unemployment, that is contributing to a slower growth. She's asking now, should we be worried about the PFA's ability to invest profitably for future use? So again, the same question, if we're taking our money, what's going to be the implication to the scheme as a whole? Is it still safe? Can it still pay folks that are going to stay back? And then because the returns have, of course, fallen from 12 to about 30. So you guys want to take that, Akintola and Richie, Akimbola, sorry, I'll be glad.
Okay, so I think I will answer the first. Okay, I'll answer the first question. So what I'll say is that, let's be honest. How many people do they are there that 25% of their RSA will be able to meet the equity contribution? We are hoping it's something that a lot of people work towards. I don't think, and that's my own honest opinion, that the portion now, it's so sizable, the number of people is so sizable that we affect the overall assets of the pension funds. And I think right now, those are the risk management part of the risk management strategies that a lot of the pension funds are looking at now. So how many people qualify at the moment under this scheme? In absolute terms, or in relative terms, to the 9 point, I think there are about 9.7 RSA holders. It's just a tiny fraction of them at the moment that will qualify for that. So we don't expect that much impact, or we don't expect too much of an impact on the pension funds. On the second question, please, if you will do well to remind me of the second question.
The whole idea of the JACPA, mass immigration, contribute slower growth, right? So should we be worried about how this would impact the PF's ability to invest profitably for future use? Just to talk about how that movement of younger people are leaving Nigeria, and the PFA is based really on, if you look at the ages, lots of so how does this impact itself?
To be honest, the data does not support that. More in the last quarter, so that's quarter two, over 100,000. There were over 100,000 new registrations in the RSA. The quarter before that, there were just under 100,000. and the quarter before that, it was about 80-something thousand. So what the data shows is that new registrations are increasing in number despite the jabber. It's unfortunate with the direction the country is going. But that also presents an opportunity for the pension funds. We have had a lot of requests of people who are jackbuying, if I can use the word, saying, okay, I'm jackbuying, but I want to continue my contributions. What is the available mechanism for me to do that? And that presents pension funds with an opportunity, because the people who jackpot will be paying in foreign currency, whether it's dollars or pounds. And, with the current FX crunch, that presents an opportunity for the pension funds to invest some of those dollars possibly offshore. Those are one of the things we're looking on. So even though it looks bad, and it looks bad with the number of people going out, it presents an opportunity, an added opportunity. And I think that's we as PenUp and pension funds in general, that's what we are looking at.
Okay. All right, guys. Thank you so much for joining. This is a Nigerian pension industry talk. We're speaking with the gentleman from the PenUp, Akoda Kimbola and Ogoche. Talk to us about this new PenCom guidelines on accessing 25% towards your RSA. So let's just go back and let's clear the room for folks that want to speak. I've got Abdul Malik Madi. Abdul Malik, do unmute and ask your question. Thank you.
Okay. Thank you very much, Kalu. For me, it's not a question, but more to reiterate, what has already been said in terms of the fact that this is not the final version of the guidelines. I'm sure that a lot of people, most of the questions that they have are around, what they can do, what they cannot do, and there are a lot of things that are actually still missing, but definitely we need to avail ourselves the opportunity to use our 25% to take mortgages, to buy houses. And for us as developers, the challenge is to see this as an opportunity to develop housing that is actually affordable for people that are within this bracket, because there's no point of the government making 25% available, making Federal Mortgage Bank loans available, family home funds and all the other intervention funds, and then the houses are not there. Because if the houses are not there, what can people buy with this 25%? Nothing. So we need to look inwards, look at the data, look at the kind of houses that the majority of the people can afford, and try to provide this housing. So kudos to PenCom and your previous speakers and the organization and what they are doing to enlighten people. We would take up the challenge, like I said, as a modern shelter our own side, to provide houses that people can afford.
Thank you so much for that introduction. I mean, it's very, very important point he's making, that if the homes are not there, then the policy itself can't work. So I really hope that the organized private sector can have a special scheme maybe for cement, and the state can come with a special scheme for land. So this is a combo deal where you say, okay, if you're going to do 25%, the state is going to earmark land, and the private sector would earmark steel, cement, and all that. So if it's a combo deal, that brings down the cost. There is no home in Lekki for 10 million. I wish there was, but in my village there is, but for 10 million, you might struggle. So I wish this was a combo deal so that it brings down the price for first-time home buyers. Cancel out the taxes, cancel out the fees. Just say, if you like in the US, if you're a first-time home buyer, you get a lot of benefits. First-time home buyer. So I think we should target that as well. So we start the ladder. Like you said, this is the first one. And as we go along, and maybe expand this. So thank you, Malik. Let me get Obina. Obina World. Please go ahead and ask your question.
All right, good afternoon, everybody. I've been listening keenly. This whole thing is new school to everybody. Yes. Personally, I'm having to. There's so many abbreviations and acronyms and all that, and like I said, one needs to be quick to catch up.
Yes.
My major concern, somebody had already pointed it out before, but I needed to reiterate because I didn't really understand the response. let me just go ahead and use like a layman term. What if you have, let's say, in your pension within something not so sizable, let's say just within 4 to 10 million? Do you think such a person is eligible? I just got an SMS from my own the pensions people are were using, and they sent me an SMS a few days ago. That's why when I saw this thing on Twitter, I just had to set a reminder because I wanted to know more. And then another thing, somebody said, so one of the people that responded, he was like, what I understood, we are the ones to go look for the house, and then the mortgage will engage the negotiations. I don't know if I'm right about that. And then thirdly, this is like a humble suggestion. I think there needs to be a stronger orientation, like somebody pointed out. This is new, so people need to really have some material or some kind of whatever literature or whatever, or the mortgage people or the pensions people need to go to establishment and hold maybe some workshops or seminars so that people can really catch up on this.
Yeah.
Okay.
Good point.
Yeah. So basically, and then finally, somebody mentioned a half year. So props to a half year people. I'm from a half year. So that's all. All right. Thanks a lot.
Go set up
Yeah.
that mortgage bank, Obina, so that we can build homes with this 25%. That's just what I'm going to say to that, right? Great. So let's
Okay.
go ahead. I mean, he got some very, very good questions there. If you guys want to take them.
Yeah, I'm big ups to the Ohafia clan. You guys shouldn't turn this into an Ohafia village meeting. Well, big ups to you guys. Um, oh, Obina, thanks. I mean, I hear your pain, and it's new. And with every new thing, we just need to get up to speed. Like I said, I don't think you should rush to take it. I think you should first understand it. And what will happen, like Kalu had said, is that you will probably see house prices begin to drop. You will probably see PFAs come in with deals to you to say, you are with my PFA. I have this pack to the developer. We can get you houses here. You will probably see PFAs coming to say, I have this pack with a mortgage bank. You can get lower interest rates. So that's what competition does. You'll begin to see that. And we're also looking at holding a couple of workshops over the next couple of months, down towards next year. And this is one of them. We'll probably have other ones where we'll dig deep in. Kalu, I hope you'll be available, where we'll just go through the process and maybe get some mortgage bank developers and we'll just do it walk through. So those will come subsequently. But also, if you go to our website, www.penup.com.ng, you can see some literature and some material there that will help you. But I think for me, what I'll say is understand it first. Don't rush to take it, because the market is also just trying to rebalance itself, the mortgage bankers, the developers, and you begin to see, even with your PF, I don't know who they are, but I'm sure that PFS will begin to come out with packages to say, you are with us, we can work with developers to get you houses at this amount, mortgages at this rate. Yeah, so those will begin to happen. But go to our website and you should be able to get some pertinent information.
Yeah, he also asked about you have to go look for the house and all that. So and also to clarify, most of the questions I'm getting has to do with how much do I need to qualify. Just to clarify, maybe you can do that again. The qualification is 25% of whatever you have. There is no minimum real estate deposit that you need to have before you qualify. I think the way it goes is if whatever you have, you can access 25%. And also, for now, you can't use to buy a land or complete property. It's going to be a mortgage facility towards you buying a home. I hope I'm correct. This is most of the questions I'm getting on DMs and on the handle, just to make sure I'm giving that right information.
For me.
Okay.
Yes, you're correct.
Okay, super. Just make sure. Okay, great. So let's get Ngozi. I've got Ngozi Nwabweze. Hi, good day, ma'am. You want to unmute and go ahead? Ngozi, hi.
Yeah, good
Hi.
afternoon.
Hi, good afternoon. Thanks for waiting. Appreciate you. So go ahead.
Okay. Yeah, I have some couple of questions to ask. Okay, number one question is this. If I'm able to access 25% of the mortgage from my pension company, the balance of the mortgage of the house I'm about to buy, is it my mortgage company that will foot the bill? That's the number one question. So number two question is this. If I have, okay, I think I just got the answer to this from the last caller that talked about the limit I need to have to access 25%. I think that's so. The third question is this: if I have a voluntary contribution and I'm able to access 25% of my RSC balance, the voluntary contribution, will it be an added advantage to me, or will it be the 25% of my voluntary contribution that will also have to add to the RSC balance? So those are the questions I have. I don't know if I'm understood.
Yeah, I hear you. Akimbola Okuche, who wants to take it up?
Yeah, okay. Ngozi, you are very much understood. So what I'll say is that the 25% from your RSA is one part. The remaining 75%, it is your mortgage bank that will fund it. Yes, your mortgage bank will fund that as a mortgage loan to you. So that's the 25%. The other thing you asked about voluntary contributions, yes, voluntary contributions will be a benefit for you. It's not going to be 25% of your voluntary contribution. It's going to be the contingent portion of your voluntary contribution. For voluntary contribution, there's a portion that you can withdraw based on a number of years. So you can use that portion to add to your 25%. Can you hear me, Ngozi?
Ngozi, could you hear?
Was I breaking?
Yeah, I'm with you.
I heard you.
I can hear you now.
You were good. Yeah, go ahead.
Yeah, so I'm saying your voluntary contributions will be very helpful to you. Because you can use that to bolster your 25% and increase your down payment. So if you've been making voluntary contributions, you can use the contingent portion. If you've not been making voluntary contributions, this is actually the right time to actually sit with your PFA to say, I want to be, or your employer to say, I want to increase the amount of voluntary contributions, because you know that you can use a portion of that for the mortgage. And it's not just the 25% of that, but a higher percentage of that for down payment.
Okay.
That's very helpful.
Yeah.
Okay. Thank you very much, Oguchi. I appreciate it.
You're welcome, Gozi.
For calling in, yeah. Let's get Austin in. Austin, hi. Austin, ST Don Bravo, go ahead. Hi, Austin. You want to unmute and go ahead and ask your question? Okay, let's get Omya. I have, is it Abu Omya? Good day, sir. Abu? Okay, let me just go quickly to my DM and get just we've answered this. Let me see. Specific amount for contributor. Yes, we've answered that. So, Oguchi, just to be clear, can you hear me, sir? I don't know if you guys folks can hear me.
Yes,
we can hear you.
Okay, so just if you can also share any literature you'd have, I will do the retweets really at any time. So whenever you guys get literature, you want to communicate this more information about, maybe an FAQ, please send to me if you don't mind, and I can also do a retweet and share, because I think like the questions here are all really talking to the basics of this. Like how much can I get? What's the process? Someone is actually asking me what's an RSA. What's the retirement savings account. So it just shows there's a lack of basic understanding really about this. The PFAs, PENOP, PENCOM. I think there's a lot of work to do just to communicate this out to Nigerians, because if people don't understand the scheme, then of course they can't get access to this. So I would just say anytime you guys have information you want to share as regards this, please send to me. If you can.
Hello, Kalu.
Yeah, go ahead.
Okay, can I quickly tell the audience, for those who don't know what RSA is all about, let me quickly take it.
No, don't worry about that. What I want to say is that if you guys have literature, please send me and I'll share it. Like your email, where they can contact if they have more questions, please send to me and I'll share. So that way,
Okay, I'll do that now. Yeah, thank you.
Yeah.
We do, and we will love to share.
Yes, please. Folks can come back after the Session. Someone is telling me they're at work, so they really can't ask questions. So yes, guys, this is going to be recorded, and I'll share the information so you can actually listen to this. And of course, you can send Penup a DM. If you send me a DM, I'll forward to them as well. So if you have any questions, send the DMs to me, and I'll make sure I forward to them and all that. Let me get Akin BC Adebayo 20. Akin BC Adebayo 20. Mute and ask your question, sir. Hello, Akin. Okay, let me get Liberty. Liberty, that's live Fatubeli. Liberty Champion. Go ahead.
Hello. I just kind of stumbled into this space now, and it really sounds interesting. Probably my question is a dumb one. I just wondered what schemes, if at all, are available for individuals living abroad who wants to own a home in Nigeria. Because the current practice is people have to cough up the huge money to buy a full house outright. But there are some of us who don't own that kind of cash deposit. What is the way forward for us? Especially if we have the income here.
I hear you. Did you live? Did you work in Nigeria previously? Did you have an RSA in Nigeria?
No.
Okay.
No.
I think the best bet for you is to try to reach out. If you look on I'm just going to do a plug for you. If you look on the handle, it's a gentle, send me a DM. Send me a DM. I'll try to hook you up with a developer I know and I trust. Then they can work with you. For now.
Yeah, I have DM'd you with my
okay,
question.
super.
Yeah.
This whole space is about Nigeria has got like a 401k, right? And we're allowing now folks to take from their 401k to making a down payment to buy a home. That's essentially what it's all about. So like if you understand, you could just take you pay 5% if you're a first time home buyer. This is giving you that equity, that cash down. So you can take that cash down to the down pay, and then you can get into your mortgage. No credit checks, just a one-time cash infusion for you to buy your home. That's what Nigeria is trying to do with this scheme. Yeah. So we'll talk on.
Kalu, I wanted to say something. And Liberty, I think you can also send a DM to Penup, and let's have a chat. Because one thing is we want to see if there's a demand for people like you who are Nigerians. They've lived abroad. They haven't opened an RSA before, but they want to be contributing towards a pension so that they can own their. Is there a demand there? So we'd like to find out the demand. And it's like I said, this is version 1.0. You know, perhaps in version 2.0, there'll be opportunities for people living abroad and who have quote unquote jackpot to be able to own their home here. And your question is not dumb at all. All questions are very welcome. So perhaps in version 2.0, version 3.0, that process will be on. So we go to have a chat with you to see if there's demand there and how you're thinking about it.
Okay, I have followed you, but I don't know if I can DM you. So anyway, yeah.
Yes, you can. Yes, you can.
All right, super. Thank you so much for that. Let me get to it. And guys, we're almost going to round up in about next 5 minutes. So if you, I think I've added everyone that has requested. If you could not speak, please send me a DM. If you have a specific question, I will make sure it gets to Penup. Like I said, this is just the first one we're doing with Penup. Guidelines came out a month ago, so we have ways to go to introduce this scheme to you and tell you how you can take advantage of this. Let's get Toby. Toby, hi, how you doing?
Hi, good afternoon, everyone. I have a quick question.
Yeah, go for it.
How is this connected to the National Housing Fund? I don't know, because some companies make it possible you contribute to the National Housing Fund, and again, the PFA is telling you you can use your 25% to secure a house. So how is this connected?
Okay, Akimole, I want to take that again.
Okay, so the National Housing Fund, it's by itself a it's a contributory scheme. So your employer takes from your salary, you contribute you contribute towards owning a home. Now your pension fund, it's a different scheme where your employer pays on your behalf, remits your pension. Now for this, the Housing Solution Fund, once you meet the requirements, you can access parts of your national housing fund. In the guidelines as specified, don't specifically uh, relate to the National Housing Fund, but it does not mean you can't use both your RSA and your National Housing Fund towards acquiring a home. You can decide to combine both of them and reduce probably your mortgage liability. I don't know if that answers your question.
Yes, it sure does. Thank you so much.
Okay. All right, guys. So we've spent, I would say, a good 1 hour with the nice folks from PENUP. That's the Pension Fund Operation Association of Nigeria. They represent the PFAs, the Pension Fund Administrators in Nigeria. We're talking about the new PENCOM, that's the regulators' guidelines on accessing 25% of your retirement savings account towards the down payment of a home. We've understood that it's only going to be for mortgages for now, which means you cannot use this to get a land or to complete a building or to buy to buy virgin land, more or less. It's got to be you want to get a mortgage. So you're going to go through that bank, right? We also understand that pensioners for now, unless they have funds in their account that can fund that 25% request, they also cannot participate. We've understood it's 5 years for the, should we say, informal sector. You've got to have contribution for 5 years, i.e. 60 months before you can apply for this. Joint applications are also welcome. So a family, a married couple can apply together as one application using both their retirement savings accounts and apply for this. We've been advised, don't rush, speak to your advisor, find that house, talk about how your repayment would be, think about what the reduction in your future pensions ahead will also look like. So the idea is that get all the information you want to get now before you go out and apply. There are going to be more changes to this. As usual, PENCOM is a very listening regulator. So they always listen, they always amend their guidelines, and I'm sure they're going to bring up new guidelines to incorporate most of the stuff that we're asking about. But I think the important thing for me is this just the first phase. If you have a mortgage, it's a good opportunity for you. Otherwise, as advised, just learn all you can and then take advantage of it, right? So, let me just see if you can give us maybe a closing remarks. If you have anything you want to say, just to close it out, and then we can call today. Again, like I said, whatever you want to share, please send to me, and I can forward that out to folks that are asking a lot of questions. A lot of questions are coming in are very, very basic, i.e., asking about the very nuts and bolts of how. So that just shows there's a big, big, big demand for more information about this. So over to you, sir.
Yeah, thanks, Kalu. And thanks for the job that you do. I understand you used to work in the pension industry. I don't know why you left us, but that's a story for another day. But thanks for the work that you do. You're a great ambassador.
Thank you, sir.
For the industry and what it does. And I know that you are really passionate about it because, like you said, the Pension Reform Act is one of the biggest pieces of legislation in Nigeria's recent history. And it's a way for people to ensure that when they retire in dignity. You don't have to go and be meeting someone for money. Private sector driven, right? But then this policy is a way for people to begin to benefit even before they retire. So before you retire, benefit and own your own home. So what I'd advise people, for those that are working in the informal sector, you need to take your pension seriously. So every month, your PFA is meant to send you text messages that your pension has been paid. If you don't get those text messages, go and meet your PFA and tell them, I want to get my alerts every month. If your employer is not paying, tell them, push them and say, I need to pay my pensions, because that's a way for you to own your own home. The second thing is you now need to begin to focus on how much you have, target pensions that you want to have. And then I'll encourage everyone to do a voluntary pension. It doesn't have to be much, even if it's 5,000, 6,000, 10,000, but it helps you because part of that money, after a while, it grows and you can use it as a down payment for your mortgage. Again, you get tax benefits when you use voluntary contributions. So I want everyone to sort of take charge of their financial future, take charge of their pensions, and take charge of their life, by checking your pensions, speaking to advisors. I mean, the fact that you are here is a good sign that you're already on that road. So get information and check our website to get more information, and we'll do more of this and hope to have more sessions to educate people and to enable more people own their own homes. Thank you.
Thank you so much. Akimbola, did you want to have any also remarks? Just very brief.
Yes, I just want to buttress what Oguche said about people taking control of their pensions. And I think what is not often known with people, RSA holders, is that every pension house has in Nigeria, we run a multi-fund structure. So if when you enroll in the pension scheme, by default, you're putting fund two, which is kind of safe. It's in between safe, in safe and aggressive. But depending on your own risk appetite, you're young, you still have about 30 years to contribute. You can decide to go on to fund one, which is more aggressive. So what that does is you have a potential. It is not guaranteed, but you have the potential to earn higher returns. So people should just engage more with their pensions. And as he said, your pension is your right. So as long as you're in formal employment, your employer must pay your pension. So if your employer is not paying any or defaulting on your pension remittance, you can drop a letter with any pension office near you. And I think there are pension offices in all the 36 states of the country. So drop your letter and ensure that your employer pays your pension. Thank you.
Thanks so much, guys. And just to put you guys on the spot, right? I think we should do this again, maybe next quarter or by end of the year, just to have just a Q&A session. Just come, guys. We'll just do Q&A. Folks can ask questions. Maybe when this has speculated, maybe I think it's very, very important. So if you guys want to do that, my doors are open. We'll just have a 1 hour Q&A session. We always do this on a Saturdays by 7 p.m. West African time. I think it also help folks to just come in and just ask those questions, right? And you guys can also take those answers. So just putting that out there. All right, guys. Thank you so much. So for everyone listening, thank you so much for taking an hour of your busy work time to just listen to us. What we want to do here all the time is talk about money, finance, of course, personal finance, how it affects you personally. This is a scheme that for Nigeria is a big deal. Guys, this is a very, very big deal for Nigeria. Most countries do not even have a fund, don't even have a long-term fund, and don't even have a mortgage scheme that they can link all together, right? But we have one, right? So this is a big deal that Nigeria has allowed us to take these pension funds or our savings and put into an asset that sort of beats inflation. So look at it big picture. You are taking Naira cash contribution and you're trying to lock into an asset that can grow with you. If you buy a 2-bedroom house and you're 25 years old and you contribute for the next 20 years, by the time you retire, that home is an asset. The value, all things being equal, should have appreciated. So you are avoiding rent. If you can rent that building out, you can take those cash streams and apply for a new mortgage when you are maybe 45 years old. But you have a house already that over time you must have paid over, right? And you own that home free and clear. So this is a wealth generator. We first of all give you a tax-free savings account with the retirement savings account. Now the government is saying we're going to add a wealth generator. We're going to add that asset to this tax-free savings account. That's what you have. Say plug way to buy a home, fair paying 25% down pay on a mortgage. So take advantage. Like the guys have said, make sure you open an account. If you work for yourself, you can do a micro pensions. Go and speak to micro pensions folks, open an account, start to contribute. This is what we call a compounding account, which means if you put in a Naira today, your interest is paid back into that account and it compounds automatically. You don't have to do anything. The PFAs are, should we say, quote unquote, a mutual fund. They will keep on rolling over and investing those funds for you, and it's compounding, which means when you start, it's as important as the interest rate they're going to pay you. If you start early, you are going to do better in this contributory pension scheme. So start today, contribute, be consistent, and that's just going to be how you make yourself successful in the scheme. Pen up, Kimbola and Ogoche, thank you so much. I appreciate you guys. Thank you for joining us today. All right, guys, you guys have a great rest of your week. I'll see you guys Saturday again. Thank you so much.
Thank you, Kalu.
Thank you, sir.